Good morning, good morning, good morning. Welcome everybody to Power Plays Palace. We back again. A beautiful Wednesday. You see I added a few things to the screen. Let me tell you what's going on. The first thing is the QR code. You can scan the QR code, take you to a link that'll bring you directly to our trade group. And you can just anybody interested in being a part of our group. Um, You can use the QR code, scan it, and then you can sign up with our group, Power Plays Palace. The other thing is something we're about to do here in a couple of weeks is the $100 to $1,000 challenge. This is where we take $100 small account and we try to run it up to $1,000. You know, and just something that target and goals. We're gonna be using some of our levels to do this, so that's something we got coming up. So look out for it. 2 weeks. I think it's gonna be December the 15th. We're gonna start that. So be looking around for that. All right. So let's get to it for the day. Boom. Look at SPY on yesterday. We ran up 683. That was 683.82. And then we have 679.33 as the low. So we had a pretty, that's like a $4 range. It ain't bad. But as you can see here, let me zoom in on the chart. As you can see here, we opened up the day. We opened up the day here. And we stayed here for a little while, do a little consolidating, pulled down, touched one of my previous levels, came back up, established that new high, and then it rejected and it came down, touched the low of the day, then it started working its way back up. Now that blue line is a trend line I put on the chart after the second time to see what it could possibly do. But it was almost the end of the day, but it did work its way back up in 682, almost 683 range. So, overall, SPY gave us a nice little range, something to play. So let's look at the chart from yesterday. All right, look at my chart from yesterday. We'll say we'd be looking at some breakout loans above 682.42, entry around 682.50, up to 682.80 with the first target 683.60. And so we did touch that first target. You could have played that, but we also had other options there that we could have looked at. So let's go back and say we're going to try to shorten this 682 off a high rejection. And then we're going to put a stop above 682.80 and play it down 681.30, 680.60, 679.75. All right, so let's go back and look at the chart. Let's see what we got. Okay, after we ran up and established the high today. Now the first thing, let's start right here. We got here first, 681.56 at the open. We had a slight rejection off the 683 area, pulled back. Then we pushed up, did some consolidating before it pulled back again. Now remember, a lot of times I told you what a lot of traders do. They come in, they don't jump in right here. They wait for the pullback. So in the retest, so you got the pullback, you got the retest up here, and which was a little further than we wanted. But then looking at my chart here with these previous days, but the purple lines are previous days highs from previous days, and the blue lines are pre-market highs and lows for previous days. So seeing that there and seeing this consolidation here on the chart while I'm watching it, these wicks, it's a fight going on. Then you see this big candle push everything down. So from right there, you could have got a $3 move, but then it sat here and hit this previous day's high or low, and then it bounced off it and pushed back up. This is why I keep these lines on my charts, man, for at least a week or so to just kind of see where they're going, because the market goes up and down all the time, but there's retest. And when we back testing, a lot of times it's just easier to have it on the chart already instead of having to go back and look. You can look at these key areas because you have those lines already on the chart from the previous days. So that's why it looked like that. It might look like a lot, but if you look at these lines, if you're looking closely, you will see that even when these are previous days, but you see even throughout the day, it still respect these areas. Now, and it didn't respect this area here, but look, it respected it right there. Look at them. So those areas are important. I mean, they can just keep you abreast. I mean, So we got the pullback up here. So I get there. So now the same rule could apply here either too, right? Watch. Cause see it pull back. Now the first person, like the bull, might not play this first pullback. Cause they know it might be a retest, depending on your mindset. And then you get the pullback, pass into it, set up a new high, broke through the pre-market. It broke through the previous days, previous highs and all that, and made a new high. And then it pulled back. So you got the big pullback. So you got a $4 move right there, and then you got to play off of that, and then pull right back up. And so, like I said, there's no way you can 100% accurately predict the market, but when you see certain things going on, you can definitely make it happen. And then on yesterday, if you did that on the put side, then you should have hit all these levels. So you could have hit the first level on the call side, but you should have every level on the put side. So you should have had, if you played the puts, then this way, then you did okay. But now look at the chart, you can see that you could have went back up again. So after that, so let's look at today's chart. Let's try to run through it and see what we got here for today. All right, so for today, what we have is if spot breaks and holds above 683.51, I'm looking to go long between 683.55 and 683.90, with my stop loss going under 683 and targets at 684.75, 686.10, and 687.45. And it's a clean continuation setup based on what we're currently seeing with the pre-market highs and lows. And so we're going to play that if that's what happened. Now, if spot tests that breakout area and it fails, then I'll be looking for shorts around 683.40, 683.60 with a stop above 683.95, with my targets being 682.60, 682.10, and 681.25. And that's if the breakout don't hold. If it goes up and it doesn't hold. Now, my game plan today is simple. I'm going to wait for some confirmation inside that 682.20, 683.60 zone before taking any entries, and try not to jump on the first candle. I'm going to wait for a 5-minute close around the my candle, because I trade the 5-minute candle. But if you're trading the 15 or the 1 hour, then you definitely want to look at that before you make a move. Look for some volume. Try to respect that. And that's your spot trade plan for the day. I'm gonna stay bullish above 683.51 and bearish below 682.27, and we're gonna chop inside that zone. We're gonna be patient and wait for them breaks, man. Do not rush the spot, because it'll teach you a bad lesson. And then what you do is you set your levels, and you take your profit at 25, 30% intervals, And once you grab your profit, lock them in and get in and out of the trade. And that's what you would get for the day. With the spot, it's pre-market high at 683.51. It's already done broke that. I was sitting here talking. Let's just go back and look at the pre-market. Spot already broke that. Yeah, it did. Yeah, it did. Look at that. It broke it and it bouncing right now off of the previous day's high from yesterday, which is a pretty decent sign. But that's part of that rejection area I was talking about. So we already got a little clue going into the pre-market. So that's something to look at. That's something to look at. So, hey man, like I said, this ain't financial advice. It's just me giving you some ideas from somebody who like to trade. So, hey man, do what you do. Follow your plan and be disciplined. Hey man, that's your trade plan for the day. Power plays, man. You have a good one.